Recording. All right, everyone. Good morning. I'm so excited to have my friend Kerry Hogan on today. Kerry is a mortgage lender with Mortgage Right, and he is going to answer some questions that I have for him today. Kerry is one of my favorite people, both professionally and personally, and I'm happy to know you and have a chance to chat with you for a couple of minutes today. So tell us a little bit about yourself, how long you've been in the industry, all of that, so that people have an idea of who you are.
Sure. Thank you. Well, first of all, thanks for having me. And, your husband and I have great times together by the fire, and I love hanging out with you guys. And Aaron and you and Chris and I always go out and have great dinner. So I always appreciate that. So I am Kerry Hogan. I have actually this September, this past month, was 20 years in the mortgage industry. Before that, I was 10 years in the insurance industry. My dad was an insurance agent for 40 years. So I have a lot of housing knowledge. I've forgotten more than I've probably taught. I think I hit I'm getting close to closing on $1 billion of transactions over 20 years. So wow. It's been a long time. If you survived 06 and 08 and you survived through this, I guess the point I want to make is if you're doing the right things and you're passionate about your business, you can survive any of these markets. All people buy houses in every market. And this one's no different. When I was a kid, rates were as high as 12 and 14%, and people bought houses. This is it. So in my lifetime, this is not the highest rates have ever been, but it is the highest rates for anyone 45 and younger. We've been in a historically low rate market, and by low I mean basically free money. I mean 2.5% is ridiculous, and we knew that this day was coming. However, there may be a light at the end of the tunnel. NAR and Mortgage Bankers Association both predict that in 2023 and 2024, we may see a dip again in rates. So there's a potential for refinances in the future to bring we're approaching 8% in mortgage rates, which historically is about where it should be, between 6 and 8%. So all is not lost. The buying ability is still there. Affordability is not as great as it was, but it's still within the realm of historical norms. So I've been doing this a long time. We offer every product, pretty much. I've done pretty much every type of product, and I can answer most questions. If I can't, I will get the answer within a short amount of time. So that's basically me.
And when you say, rates will go down, people will have the opportunity to refinance. I mean, I think we both know it's never going to be at 2.5 again. What would you say would kind of be your guess as to what rates might kind of settle down to in the next year or two where people could do a refinance that would make sense?
I think that 4.5 is not unreasonable to think that it could go to. Okay. I don't know that it would go much below that. Everything that I watch, that's probably around the bottom. If that happens, the Fed is fighting inflation right now. It's the Fed doesn't control mortgage rates, but their tendencies and what they do in the market does affect long-term what happens to mortgage rates. Really, the bigger issue is the Fed exited buying billions of dollars a month of mortgage-backed securities, which they've been doing for nearly a decade. Since 08, they have pumped money into the market to depress mortgage rates, which has worked for all of us for a long time. And we've all been waiting for, we thought 6% would be about where the rate should be, and they're higher than that now. So I think we've seen a swing. The pendulum never comes back to normal. It always swings the other way, and then hopefully it'll settle. I think we, for the next 3 to 6 months, we'll be in this market potentially. I think there is a potential for it to come back down for a bit of time.
Okay. Tell us a little bit about how you guys do things over at Mortgage Right. I know you have a fantastic team, and we love working with your team. Tell us a little bit about what folks could expect working with you as far as processing times and what you're going to ask from them and how things kind of go over there.
Okay. So, I'm better face to face with people than I am in front of a crowd. I try to build a rapport with all of my clients. Usually the first thing I ask, so that I have a good picture of what I'm looking at in terms of what they're bringing to the table, I usually ask them to fill out an application online on our secure website. It takes them about 15 minutes. What I really ask them to make sure they get correctly is their social security and their date of birth, because if those are wrong, it affects the credit report, which can affect everything down the line. Everything else, if they put in the basic information, as you know, they do the best. Nobody does it correctly. Everybody makes mistakes on it. It's fine. I can fix pretty much everything. But if they take the time to put in the application, when I review it, it doesn't take me very long to figure out, to build a scenario for them for what they can afford. I'm basically looking at what is their income per month, what are their current debts per month, and what type of assets do we have to work with, so that I can determine the debt to income ratio, which is the biggest factor. Do they qualify for the payment that they're trying to take on? So we basically take their monthly income and their new monthly housing payment with the payment for the new home for principal, interest, taxes, insurance, and homeowners association or condo fees. We divide that number with, well, we add to it all their other debts, divide it by their income, and that gives the debt to income ratio. So all of that can happen in a short period of time. If they put in correct information, I can build a good scenario for them in a short period of time. Then we go over different product types, what may suit them best. You know, VA can go to 100% financing. FHA is 3.5% down, but it's usually better if they can put 5% down, because the mortgage insurance is a lot better on conventional products than government. And then there's outlier programs. There's 15-year rates, there's 30-year rates. I try to structure the best, what makes sense for them long term, and try to educate them in the process. And then once that's done, I create a pre-approval letter. Before I create the pre-approval letter, however, I ask them to upload their supporting documentation for income, assets, tax returns, and things like that, so that I can verify what they've told me is true. And then once I have that, the pre-approval letter is created, and your agents are out looking for properties and are able to write a contract. Some people I will submit to underwriting first. I will give them a pre-approval letter from me that says I've reviewed everything and it looks good. But at the same time, while you're out looking at homes, I'll go ahead and submit it to underwriting and get a credit approval from an underwriter. That means they've looked at their income, they've looked at their assets, they've looked at their credit, and all we're waiting for is title work and appraisal at that point. So we're able to close really fast. What I failed to mention in that process is I have a great team, as you said. Trey, who is female, she's got a great name.
Trey is female and Kerry is male. I always tell
that's right. But my pronoun is he, so you know.
It's important these days.
Yes. So, but Trey is excellent. I personally review the documentation, but she goes through it with a fine-tooth comb. You know, if the statements say 1 of 8 pages and we only have 7, she's going to ask for that 8th page, even if it's blank. She puts together the package for me once we've locked the rate, and she orders the appraisal, she orders the title work, she gets everything set up for me, and then submits it to Tara, who is my spectacular processor. And then Tara sets up everything to submit to an underwriter for actual approval. And, you know, in reality, if I've got them underwritten up front, we can close in a short period of time. The only thing we're waiting on is appraisal and title work, and that usually takes about 14 days. In this market, sometimes I can rush an appraisal faster. You may pay a little more, but we might be able to get it back in days. And then we're just waiting for the title work.
Okay. And what would you say to people who don't want to go through the pre-approval process until they're actually ready to go out and look at homes? Because we hear that a lot. I know you hear that a lot. What would you say to them?
Well, I'll give you a perfect example. We had a Navy couple, both were retired naval officers with spectacular income, very high income, lots of assets to work with, would be the perfect client. I mean, except, and looking through their credit history, there was no blemishes except for one, which hit in October of this year. And
Wow.
it plummeted his score from 805 to 679. And we had to have a 680 score in order for him to go up to $1 million for a VA 100% financing. So that's case in point. This is the perfect borrower who has no idea he has this outstanding issue for $121 on a credit report.
How can that make such a big impact? Aren't the credit bureaus smart enough to see 99.9% of the payments were on time and nothing outstanding, and this was clearly an aberration? They're not. Are they not smart enough to make
so
that?
The first fallacy you said is smart. Nothing about credit reporting agencies is smart. It's all algorithm based. Okay, so because that infraction hit this month, the first month that anything is reported, negative item is reported, affects the score the most. In 2 months, that score will rebound. But right now, that score has taken a huge hit, and there is nothing we can do to fix it. We tried to contact, it was a utility. It wasn't a credit card. It wasn't a car payment. It was a utility that filed a collection and for $121. So, you know, it is probably the most ridiculous that I've seen in 20 years. But this is case in point of, had he contacted me and we had time to fix it, you know, it would have taken 2 months, but we did a workaround. We're getting the loan closed. He's going to pay a slightly higher rate because of the lower score. But knowing what you have to work through and figuring out for you what is in your best interests for the future, he didn't want to wait. He wanted to move forward with however I could fix it, and I had to massage it to make it work. But had we had time, he could have had the best possible terms that any borrower with an 850 score with high income and great assets to work with.
Yeah, I tell people it could either be a mistake in the truest sense of the word, or it could be just something that, you know, you moved and you didn't get the bill, or it went to your spam in your email, or, you know, just something that you really didn't know about. And we got to give the lender the opportunity to help you fix it with plenty of time, like you said. So I agree. I think that people 6-7 months out is not too early to go ahead and get approved, and just make sure that everything's correct. See if there's anything you can do to bump yourself into the higher tier for the very best rate, which especially now is so important, more important than it was 6 months ago. 6 months ago, 2.5 versus 2.75, who really cared? But now it does make a difference. So I definitely encourage people to reach out.
In that vein, just real quick, you know, some people think that pre-approvals expire, and really they don't. I mean, the letter may expire, but what happens is the credit's good for 90 days. And I just need new pay stubs. I need to make sure you're still making the money, and I need to make sure the assets are still there. As long as you continue to give me paperwork and I can re-pull the credit over time, the pre-approvals are indefinite, really.
Yeah, I hear that a lot too. So I'm glad you cleared that up. They really don't expire. You just update them with your updated information.
Correct.
How is your company adapting to the current market? Obviously, you have a lot of buyers who are very unsure whether they should be purchasing. You have real estate agents who are trying to educate buyers on the current, you know, market with rates and everything. What are you doing, and how can you help both buyers and agents in this high interest rate environment?
I think we try to educate agents to come at to get creative in how we structure loans. So to give you an example, homes appraise higher now than some of the contract prices.
Yes.
And if the appraisal comes in 10,000 over contract price, you could request to increase the price of the home with the seller and ask for $10,000 credit at closing if they weren't getting one before. That helps them to either do a temporary buy down, like a 2-1 buy down, where they're the seller is paying the interest to buy your payment down for the first 2 years, or you could use that money to pay for points for a permanent rate reduction by paying discount points, using that money to buy the rate down for the life of the loan. In terms of what we're doing different, we watch the market every day. In terms of product offerings, like ARMs are coming back. ARMs, when, like you said, if your rate was 2.5 or 2.75, you're not going to do an ARM in that environment, but in this environment, it may make sense. So it's looking at the product spectrum that we have to offer and trying to bring to the table creative ways of writing contracts to help the borrower in the best way possible.
Do you think that agents are good about reaching out to lenders and saying, I need help strategizing on this? Is there anything I'm not thinking about? Do you see a lot of that? Or do you think that we should be reaching out more to see if there's anything that we didn't think about, right?
Well, you're the best case of that, right? You reached out, you put on social media that you hadn't heard from lenders, and here I am. I'm trying to, I think that it is good. I've done this for 20 years. I think we get complacent. You may get complacent in what you're doing.
Sure.
None of us, what we need to do better is adapt to the markets. And, you lit a fire under my pants, and I know all of these things. They're in my head. It's just digging deep, educating your agents. I mean, you have a great team. I speak to several on your team every day, and it's remembering that just because I know it, you don't know it. And I need
reminding people, because we forget, like, oh yeah, I forgot about that.
That's
Thank
exactly
you.
Right.
No, I agree. I think that more than ever, we need to be talking to lenders, getting on three-way calls with the buyer, making sure there's no stone unturned. For example, there's a client you're helping us with who I know our agent did a great job negotiating a huge credit for him. And it was actually more than what the loan program would allow given his down payment percentage. And so I think what we're going to do is change the down payment percentage a little bit higher so that he can get this huge credit that our agent was able to negotiate for him. Right. So, sometimes we can be flexible there.
So what happens is when you put 10% down, you can only get a 3% seller credit from the seller. And if you put any amount over that, 10.1%, you now bump up to the 6% seller credit. So where he was getting 7,500 and staying under the 10,000 maximum of what 3% was, now he's going to get 14,000. Instead of paying 10% down, so the down payment was going to be 34,900. We're just going to round it to 35,000. And now he's eligible to get the up to 6% credit, which he's not getting the full 6%, but he is going to get $14,000 credit, which is, that's a significant amount to help offset his closing costs and buy down the rate. And he's one that doesn't see the temporary buy down as a good choice for him. He's going to do the permanent and understands that he may be able to refinance, but he may not. And he's a conservative guy and he wants to use the money to pay the rate down for the life of the loan.
Yeah, absolutely. My last question for you is, over the 20 years that you've been in the industry, you've worked with hundreds of real estate agents, right? If not thousands. What would you say are, the best practices that you see when you think of the best agents that you've worked with over your career? What do you see them doing differently from some of the agents who maybe don't have as much success or don't last as long? Just for the agents watching this interview, what advice would you have?
I think for all of us, both industries survive and die with the same amount of effort that we put into it. And I think it's hard for all agents to bring the passion that we all need to bring consistently over time. And I think the ones that have done it and survived have adapted every year to each different market, have continually educated themselves on the things, whether it be lending or short sales or working with title company. There's so many facets of what happens. It's not just a real estate agent selling a home. There's a real estate agent, there's a settlement company, there's a lender, there's an appraiser, there's an inspection, there's an insurance agent, there's so many pieces of this. And you as agents and me try to corral everything and make it the smoothest possible transaction possible for the client. And I think that the successful agents over the years have continued to educate themselves, bring back things they may have forgotten, and adapted to the markets. You know, we've been in for lending, to give you an example on the lending process, for the last 2 years, we've been in a high volume market where we've just been efficiently turning over as many refinances and purchases as we can. And we may not have had the time to build a solid relationship where we get referrals from those clients. And we need to go back and touch each, use the database, touch those clients, ask for referrals. I think that's the same for you guys. And I think that the agents that have been the most successful over my career and have had staying power have had the ability to adapt to every single market. Because, each year each quarter, it's a different market for us. I mean, spring market is completely different than this market right now, regardless of the rates.
Right.
And I think the best stay in their clients' minds. They touch them in terms of, reaching out to your database. I think video is spectacular. I think that creativity is a good thing as well. It's trying to think through, what am I not doing that I could be doing better? Continually evaluating your business and what your structure is.
And I think a part of that is staying humble and staying open, willing to be wrong on things, willing to admit that there's things we don't know. I always say I'm happy to be wrong on something, right? Like, teach me a better way, teach me a different way, challenge me. And we need to be working with partners who will do that and, expand our knowledge. And, none of us should be acting like we already know everything just because, I'm 18 years in the business, you're 20 years in the business. I learn every day. And I'm sure you would say the same thing. And that's part of why I love my job, right? Is every single day. I just got off a team meeting with my team, and another team joined us, and I learned like 3 things that I didn't know, and that's exciting to me. And I want to be doing that. So awesome. Okay. Well, Kerry, we appreciate your partnership. We appreciate everything that you do for our clients. I appreciate everything you do for the agents on my team. And so thank you so much for your time. Let everybody know, what is the best way to get a hold of you if they'd like to have a conversation with you.
Sure. My phone number, it's direct. It's the only number. It's my cell. It's 703-385-1567. My email is Kerry. It's Kerry @mortgageright.com. Mortgage has two G's. MORTGAGE. Right, RIGHT .com. And my website is applywithkerry.com. It's simple.
Okay, awesome. Thank you so much for your time. Have a great rest of the day. And I enjoyed spending a couple minutes with you.
Thank you, Jen.
All right.
Bye-bye.
Bye.